The low PE, and again, I think, sub 40, if that's still where we are, is pretty good for the what this company is up to, is often cited as a reason why Nvidia can still go on a strong run from here. Do you think that's likely to be the case? What do you think about the valuation?
Yeah, I think it's entirely fair. I mean, 40 is a big number. The market trades for 20, so it's double that. But it does have this locked-in growth rate from all the companies that want to invest in generative AI. And so its glide path is still pretty strong. And against that metric, it looks pretty good. I'd also note that the highest Intel ever got in the 1990s was number 3 in the S&P. And we're now talking about Nvidia perhaps getting to number 2. So it is interesting that chip companies do kind of have a little bit of a cap as to where they can end up in market cap. But given that Nvidia's got, I think, a much stronger story than Intel in the 1990s, I do think it can keep working from here.
Sean, turning to you, what are your thoughts on it?
Sure. So just to step back a little bit and put this in historical context, there's always the element that we should be wary when we see very high price to earnings ratios. If we look back through the historical data, what we find is that stocks with high prices relative to earnings generally struggle to generate enough earnings to repay those high valuations. Now, this is a broad feature rather than something that applies on every individual basis, but it should kind of set your baseline expectations that for a company that has a fairly high price earnings ratio relative to the market, you should already be scrutinizing where it's going to find those extra sources of growth. Now, Nvidia in this case actually has performed quite well in the last couple of years, where it's really increased its earnings substantially and has actually brought its price earnings ratio down.
Right.
Even though the level is quite high, it used to be substantially higher. So it may be an exception here where it is able to generate sufficient earnings growth to justify those high valuations.
Yeah,
it'll really depend on demand for its product is.
Well, and interestingly enough, now we're citing a forward PE of closer to 47. So I shouldn't keep saying 38 when the price run up has moved the needle a little bit on that. Maybe the stock split is doing that. But Nick, the point about earnings, I don't know if we can show a historical PE chart for them or for other stocks. But if you go back to probably 2010, Netflix had a PE over 100. And there was massive debate at the time about whether it was justified. And in the long run, honestly, it was. Tesla, a little more recently, maybe during COVID, had a PE of around or a little bit over 100. That seemed to mark more of a sign of a short-term top. So what to you, is there a number at which, PEs mean something? Are they all just gauges of momentum, or do we think Nvidia can kind of earn into the high ratio that it has?
Well, I tell you, I used to work for Steve Cohen, and he would drill into our heads that valuation at a single stock company level just doesn't work for picking stocks that go up or down. So on a single stock level, I don't worry too much about PEs, whether it be 10, 40, or 100. I'm looking for the incremental earnings growth that can come over time. And additionally, Professor Vendenbeiser's work has shown that 1% to 2% of stocks generate all the long-term returns in stock markets around the world.
Wow.
So you have to look for those 1 or 2% of stocks that are going to work over 10, 15, 20 years. Nvidia is clearly in that camp, and based on the enthusiasm around generative AI, should continue to be in that camp. So it is one of those must-own stocks.
Sean, the question that for me is a little bit more difficult to answer is how big a company is Nvidia going to be potentially? If it's already, what did we say, $2.5 trillion in size, and if it runs up another, let's just say it doubles from here, which the stock investor would probably think is conservative. Are we talking about a $5 trillion company? I don't know if people want to incorporate buybacks into that, but on sheer size alone, is Nvidia, I would love to know the economics and kind of the market history behind a company of that sheer size, putting the PE totally aside.
Right. So there's certainly the element of how large a company this can eventually become in terms of how large the eventual market can become for the product that it's selling. Now, one point I'll highlight here is that a lot of the discussion with Nvidia revolves around what the prospects for AI will be going forward. But one element that doesn't get, say, as much discussion is that when you're buying into Nvidia, you're not just making a bet that, say, AI or AI-needed chips are going to take off and dominate the market going forward, but you're making a bet that it will be specifically Nvidia that continues to dominate that market 10 to 15 years down the road. And I think that's where there becomes a little bit more difficulty in trying to evaluate whether it will earn enough to repay, say, a $5 or $6 trillion valuation. It's not just a question of how much demand for AI processing power will go up, but whether this company can remain as the dominant figure there. Because what we've seen in the past is that there are many industry leaders that are eventually supplanted. It's relatively difficult to remain the industry leader for 10 to 15 years. And there's obviously the example of, say, Cisco, the most valuable company in the world in 2000, which eventually was unable to really reap the benefits of increasing use of internet services for all those transformative elements that we saw develop, but largely profited other companies rather than Cisco.